Now we will start with our next special item. Our next special item is towards a stock. Put a heading. Special item is towards a stock. Okay. What kind of stock? The stock of raw materials, stock of sports materials, stock of medicine, like this, the question will be tested for you. If opening stock and closing stock of any item is given, okay, any item is given, you are going to do, there can be two probabilities. Okay, one is without sale of the item, without sale of the item. If it is in the case of the item is not sold, then you will prepare directly a stock account. Directly a stock account. Okay, that is opening stock will be like this. To balance brought down. Any purchases is made, we will write two purchases. Okay, then we will do any consumption which we have consumed. Okay, that we will on the credit side, and we will put our closing stock on the credit side. Okay, this purchases value which we are going to find out, this should be transferred to income and expenditure account on the debit side. Okay, sorry, this one, this purchases needs to be taken care. This purchases needs to be taken care. Just a minute. So here the purchases and this consumption, we need to transfer it to income and expenditure account on the debit side. Here, if I want to write it in put it in very simple, it is nothing but opening stock plus purchases minus closing stock will give you consumption. Okay, will give you a consumption part. And the next thing is there may be a possibility of the chances for to sell that item, to sell newspapers, to sell sports materials and all. So with sale of the item, first thing you need to prepare is preparation. I will call them as trading account. I will call them as trading account. This trading account, first one you will write opening stock. Okay, next one you will write purchases. Okay, next thing is I will write the sales. Okay, this sales information you will get it from receipts and payments. On the debit side, you will be able to identify. Then by consumption, whatever I consume, I will get this data from income and expenditure account. Debit side, I will get this data. Okay, and obviously I am having my closing stock. By closing stock I am having. So from this, what I will know, what is an profit if it is any. If there is any gross profit, I will be able to identify that should be transferred to creditors account. In this question, they may test you in any other way. They will give all this information. They will ask you to find this part. Sales. Because they given the sales, you need to identify consumption. So this is how it will works. Okay. Based on the question requirement, you will make adjustments for it. Next. Suppose there may be another difficult possibility that they may test you on the basis of balance from supplier. Most important thing you need to note it down is if balance of supplier is given. Balance of supplier means balance of creditors is given to you. Then prepare supplier account. Here I am not saying as a creditor. Here I will use the word supplier account because it is nothing but a non-profit organization. Okay. So in this, we are going to prepare creditors, or you can also say it is a suppliers. So under the suppliers account, we will prepare first we will prepare two receipts and payments account because it is a supplier, it is a journal entry, it is a payment which I need to make to the supplier. I will write it on the debit side. Now on the credit side, I will write down my opening balance on creditors. Opening balance on creditors I will do. Here I will write down my closing balance on creditors. Here I will write down closing balance on creditors. From why there is a necessary to prepare suppliers account. The necessary to prepare a suppliers account is to identify the purchases. Is to identify what? To identify the purchases. To identify the purchases only, we are preparation a suppliers account. In worst scenario cases, they may test you. Okay, they may test you to prepare suppliers account also. So here write down in your notebooks that by purchases account. In some cases, they may give you a purchases account. Instead of that, they may ask you to test the receipts and payments account. Okay, this should be transferred to stock account as the case if it is without sale item, or it should be transferred to trading account if it is sale item. If the item is going to be sold, I should transfer it to trading account. Okay, this is the major thing which you need to remember. Okay, regarding the closing stock is concerned. Next thing, which is a very simple special item, the last two special item is regarding fixed assets. Everyone knows fixed asset. Why I am using specifically fixed assets? Because for non-corporate entities, I will use the fixed assets name. For corporate entities, I will use the property, plant and equipment, PPE as a name that is regarding as AS10. It will connect through AS10. The same accounting standards which you are going to learn it in your CMA final. Why I am specifically insisting each and everyone to study accounting standards. Many of you may feel accounting standards will be difficult, but why I am specifically insisting in your CMA final, okay, you are going to learn the same AAS along with Ind AS in your CFR paper, that is corporate financial reporting paper. You are going to learn it. Okay, so make sure you have very good conceptual clarity on the accounting standards. Now coming back to a specific special item, fixed assets. Whenever they will ask us to prepare fixed assets, okay, always make sure depreciation, if I will give you certain points regarding fixed assets, if depreciation is to be charged at year end. Okay, that's the first point, which is a basic point. And the next point, any purchases be added. Any sales we need to subtract it. Okay. Next, if asset purchased at year end, no depreciation should be charged. No depreciation should be charged. No depreciation will be charged on the assets which I purchased at the year end. My balance sheet date is 31/3/2023. I have purchased the asset on same 31st/3/2023. There is no depreciation at all for it. Okay, actually in accounting perspective, you will learn with depreciation in different manner. In income tax perspective, that is direct taxation perspective, depreciation calculation as per section 32 will be entirely different. Don't confuse with this two. Okay. So next special item is many of them will forgot to say that maybe in some question it may be like a hidden adjustment, hidden special item in some question which is not outrightly will be given to us. That is a special item on interest on investments. Interest on investments will be a special item whenever ROI, what is an ROI? Rate of interest is given. Whenever rate of interest is given, then first you need to identify what is total interest. For the purpose of total interest, we will calculate rate of interest percentage into investment value. That give you some value. Next, less received as per receipts and payments account. Received as per receipts and payments account. Then you will be able to find what is an outstanding value. That outstanding you should transfer it to balance sheet on the asset side. The receipts and payments account, you will get it on the debit side. This value you will be able to identify or you will calculate and you can carry forward to a income and expenditure account on the debit side. All the investments, all the asset, investments, interest, assets, it is depreciation. All should be charged from purchase date to year end. It is not put to use to year end, it is purchase date to year end. In an accounting, we will take purchase date. Okay. In income tax perspective, we will take it differently. As far as accounting is concerned, we will only concern about this purchase date. For as far as NPO chapter is concerned, purchase date to year end. If I purchase it on 1/9/2022, my year end will be on 31/3/2023. My 9, 10, 11, 12, 1, 2, 3. So I will only calculate 7 years. Sorry, I will only calculate 7 months. Yes, I will only calculate 7 months interest or 7 months depreciation. Okay. So these are the basic special items which you need to remember. And the final finishing touch which I am going to give it under the NPO is write down the note. Write down the note. What is the note here? In balance sheet, bank balance as per cash book is considered. Bank balance as per cash book, suppose they have given with any specific adjustment to the banking transaction, you will only take the bank balance as per cash book. Okay. Sports equipment is given in your question. It will depreciate. It will depreciate. Suppose they will use the word sports material. It is like consumption, consumed. Depreciate is something which is having a value which is slowly and steadily decreasing. Suppose if I take table tennis board is an sports equipment. Table tennis ball is an sports material. Table tennis bat is an sports material. Okay, sports material, we will find out consumption. Sports equipment, we will be able to find out depreciation. This is an important thing from your exam perspective. And the next important point you need to remember, if you want to find out opening capital, if you want to find opening capital, prepare opening balance sheet. Prepare opening balance sheet by keeping all the opening liabilities on the right hand left hand side, on all the assets on the right hand side you need to do. Okay, liabilities on the left hand side, assets on the right hand side, you need to prepare, and you need to prepare with the opening balance sheet. Okay, this is an entire conceptual discussion on the NPO topic. This NPO topic will having a weightage of 14 to 15 marks. Sure shot 14 to 15 marks in your examination. I am not taking any MCQs. I am simply taking only the sum oriented, practical sum doing. Okay, that is itself will carries only 14 to 15 marks. Okay, so make sure in a morning session we have seen 14 marks worth of topic, that is single entry system, and in the next part of the session we have discussed about the NPO with good conceptual clarity we have done. Okay, make sure on today evening itself, okay, on today evening itself you are going to revise it on immediate basis.